Hi there, friends. My name's Angelica, and I just wanted to show you really quick on how to fill out your withholding certificate at your job. Okay, it's really important that we read this form, but you also understand the implications of you filling out the form accurately. So, what do I mean by that? So, what I mean by filling out the form accurately. So, obviously, here it's asking you for your name, it's asking you for your last name, your social security, address, city. And then on part C, it asks you, are you single or married, filing separately, married, filing jointly, or qualifying surviving spouse, head of household? These are really important for you to realize and understand what those mean, right? In literal sense, of course, it means you're single, then they're going to take as much taxes as they need to based on the income that you're making for that year. So, depending on being single or depending on being married filing jointly, then what happens is if you fill out this form, let's say that you are married and your husband or wife has a job as well. There's instructions on here on step 2 where it says multiple jobs or spouse works. So you want to check this box off if your spouse works as well. Now, the reason why you want to do that is because what happens is if you click on here and you say married filing jointly, okay, and you, of course, are married and you also have a couple of children below the age of 17. So let's say you add on here $4,000 and you add on here that you are married filing jointly. So the way that the IRS is going to calculate this, okay, is that they're going to go based off of your income. And let's say, as an example, let's say you're making $100,000 and the standard deduction for 2024 is $27,900, which means that the IRS is not going to tax you on that amount. So if you made 100,000, you reduce the 29,700 or 27,900, and what'll happen is that you are supposed to be taxed on the full amount that is remaining on your taxes on your W-2. But what we have seen is since last year, what they have done or what the IRS has been going through is that they are actually giving you the credit throughout the year and not at the end of the year anymore. So, if you're putting on here that you're married filing jointly, okay, you're adding $4,000 here as your child tax credits. They are giving you those credits in advance throughout the year. And then what's happening is that at the end of the year, you are having to pay more on taxes because they did not take enough taxes throughout the year. So, what I always suggest is that you are checking your pay stubs and making sure that you are paying FIT, which is your federal income taxes, your state taxes, and as well as your unemployment taxes or anything like that from the state that you're living in. These are really important facts because what happens is, the past couple of years, I literally have seen a lot of my clients paying taxes at the end of the year because they were filling out this form as married filing jointly. And again, I'm not saying that that is bad. It's just that if you're adding married filing jointly, the government is not going to take taxes away from you until you surpass the standard deduction, which means if it's married filing jointly and it's $27,900, well, if you look at your W-2, sorry, if you look at your pay stub, okay, the first if you filled out this form with your employer and the first amount that you see. If you see $27,900 that you've already made and you have not paid any federal taxes, this is why. Because the form was filled out as married filing jointly. Again, I understand that if you are married filing jointly, then that's how you're filing. But if you don't change it to single, okay, the government is not going to take enough taxes and you're going to end up having to pay taxes at the end of the year. You can either do that, mark this as single, or you can check this little box here that says do only one of the following. Okay, so use the multiple job worksheet on page 3. So page 3 is down below here. So you can choose to fill out this worksheet that will help you and guide you to see what options you will have. So if you have 2 jobs, if you have 3 jobs, but at the end of the day, this will make a huge difference as well. Because if you don't check this box and you check that you're married filing jointly, the government is not going to take enough taxes from you and you're going to owe taxes at the end of the year. Now, either if you choose to pay your taxes throughout the year or you prefer to pay it at the end of the year, it's really up to you. But I always see my clients and at the end of the day, they're always struggling to pay their tax bill at the end of the year. That's after all the holidays and things like that. January, February, March comes in and we're worrying about paying our taxes at the end of the year when most of the time it's easier for you to pay them monthly or every 2 weeks when you are running payroll or when you're receiving your paycheck and your pay stub. You have the ability to change this form at any time during the year, okay? Because before you used to have exemptions. Now, there are no exemptions here. So if you feel that you're not paying enough in taxes, in federal taxes, then I suggest that you fill out this part here where it says extra withholding and you add another $50 or $100 if you feel that you are not paying enough in taxes for federal. I always go with 10% just because, if you've already made 50,000, you want to at least have paid about 4,500 to $5,000 in federal taxes. And again, this is just federal. This is not including Medicare, Social Security, unemployment, state taxes. That is a whole different form that we would need to fill out. But again, I'll create a quick video for you guys so you guys can see, kind of understand what I mean. So again, you would fill out this part here where it says extra withholding. The other thing I would suggest is that if you are married and your, let's say your wife or your husband makes less money than you do, you might want to have them add the credits, because also what we noticed is that they were giving you the credits throughout the year for the kids, and then at the end of the year, because you were having to pay taxes, you would not receive the children's credits because you had to pay taxes. That's a lot of the clients that I had last year. And this year actually were clients that ended up having to pay more in taxes because they were not prepared with this form. So I encourage you guys to make sure that you're looking at your pay stubs. That's number one. Number two is that you're filling out this form accurately. Again, if you are adding that you are married filing jointly, the government is not going to they're not going to take taxes away from your pay stub or your check until they surpass your standard deduction, as well as your children's credits. So when you are adding your credits on this form, that means that the government is going to give you those credits throughout the year. And then at the end of the year, you're going to have to pay it back. So if you need any help or you need any assistance with this, please feel free to click the link below and schedule a quick chat with us so that we can help you and guide you throughout this process. Thanks, guys. I hope you guys have a great day, and I will talk to you guys later. Bye.